A reflationary approach to 2020 in line with National Development Plan. SMID and Google to train 3,700 MSMEs on digital skills. Asia Pacific stocks mostly fall. Tech stocks under pressure amid rising U.S. bond yields. Plus, oil prices slip as U.S. fuel inventories rise. The program is Business Express reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. You're welcome to that time we talk business, and we start with the story that the Small and Medium Enterprises Development Agency, SMEDAN, is partnering Google Development Skill alongside Mind the Gap in training 3,700 Nigerian youth on digital skills. The training is initiated and sponsored by Google International to train 1 million youth in Africa. SMEDAN, as a body that regulates micro, small, and medium enterprises in the country, will continue or is concerned with the training of the selected MSMEs in Nigeria, which are 3,700 in number. SMEDAN this year will expand the number of beneficiaries from 25 to 100 each that will be drawn from the 36 states of the Federation, including the Federal Capital Territory. The major target of the training is for MSMEs to move their businesses online seamlessly without paying a penny, as the world gradually revolutionizes to digital technology. The training, which will be carried out mainly for micro, small, and medium enterprises, is expected to hold across the 6 geopolitical zones of the country. And the Minister of Finance, Budget and National Planning says 2022 budget seeks to continue reflationary approach of 2020 in line with the National Development Plan. The minister said this at the 2022 budget presentation, explaining that projected aggregate revenue to fund the budget is 9.01 trillion naira, with 65% of the fund to come from non-oil sector. She explained that government targets to raise revenue to GDP ratio from current 8 to 9% to 15% by 2025.
So without the government-owned enterprises' retained revenue, the federal government return revenue will be 9.01 trillion. To promote fiscal transparency, accountability, comprehensiveness, and allocation, we have indicated for the first time in the 2022 budget the allocations to TETFund. In the past, it was not previously recorded as revenue. And the budgets of 63 government-owned enterprises are fully integrated in the 2022 budget. In aggregate, 35% of the projected revenues is to come from the oil-related sources, while 65% is to be earned from the non-oil sources. Again, this is underscoring the fact that government revenues now are largely from the non-oil sector of the Nigerian economy.
Joining me to talk more on the budget is Dr. Muda Yusuf, CEO, Center for the Promotion of Private Enterprises. You are welcome to Business Express.
Thank you very much. Good afternoon to you.
Good to have you. Well, the public presentation of the 2022 budget was executed today, just some hours ago. Can you give us your general thoughts about it? What aspects of the budget are worthy of note?
Well, I think we should start on a note of commendation. The fact that we were able to retain the January to December budget cycle is something that one should commend both the president, that is the executive, and the legislature for being consistent in ensuring that we maintain the January to December cycle of budget. This is good for planning. It's also good for budget implementation. So we must acknowledge that. Secondly, when we look at the budget and also when we look at the details given by the finance minister, there are two major components. There is the appropriation component and there is a policy component. The appropriation is about the allocation of funds to different ministries and NDAs, projects, and so on. And if you look at that, I will notice that rightly so, security was allocated perhaps the highest chunk of the funds in the budget. We all know what the security situation is. So such prioritization, I think, is something that is good. There's also very high priority given to education, given to infrastructure, to health, and I think to social development programs, social intervention programs. I think those things are also okay. Of course, one is concerned about the reservation that were expressed by the president at the point of signing the budget. And that is about the insertion of some projects, which was put at about over 6,000 projects.
Yes.
And the fact that about 10,000 projects were either modified or reduced in its allocation. And of course, some other issues bordering on the assumption of revenue which were raised with that basis and so on. So these are very fundamental issues that were raised by the president. And we are hoping that as soon as the National Assembly resumes, there will be a proper reconciliation so that both the executive and the legislature can be on the same page. But really it's something that's of concern because this has become a recurring issue between the executive and the legislature. And my view is that at least at some point, we should have a clear interpretation of the Constitution to define the limits of the National Assembly as to the issue of appropriation, whether they have the powers to include new projects, whether they have the power to reduce allocations and so on. These things we need to put it to rest. And the only way to do that is to get the Supreme Court to interpret the relevant sections of the Constitution so that we are not going back and forth every year as to what should be added, what should be deleted, and so on and so forth. But on the whole, I think it's a very good thing. But for those of us in the private sector, the policy component of the budget is even much more important.
Okay.
Because I see that when the minister was presenting the breakdown, there's a whole lot of emphasis on non-oil revenue. And the bulk of this revenue, obviously, is expected to come from the private sector. So we also need to caution that we don't also overburden the private sector in the drive to raise revenue. Otherwise, that may affect both the revenue itself and the capacity to create jobs in the economy.
Okay, Doctor, while we wait for the harmonization which you have raised, as well as the revenue component, which the expectations, from your own point of view, the expectation from the private sector is a bit high. But let's take a look at company income tax collected. It was 115% above target, while the value added tax was 165% in 2021. What factors made this possible, and how do we surpass this vis-a-vis the fact that the expectation from the private sector has been upped?
Yes, I think the factors that were responsible were the fact that we are beginning to see the recovery of the economy, and the bulk of these funds is actually coming from the big companies, not so much the SMEs. And most of the big companies are beginning to recover. We are beginning to see a gradual normalization in the economy in terms of economic activities. We didn't witness any significant lockdown during the year and all of that. So all of these things, I think, created the environment for the revenue. And of course, you know that there was a review also in the tax rate, particularly the VAT. VAT used to be 5%.
Yeah.
It was increased to 7.5%.
Yes.
So that also added to it. And all of this also underscored the point that there's a lot of pressure on the private sector. I think the emphasis should be, and I think the minister also alluded to that, the creation of an enabling environment so that the economy itself can grow, businesses can grow, you can have more investments, and if you have that, you have a lot more revenue. Because right now, for those who are already in the tax net, there's a lot of complaints about the pressure of tax, and not only just the tax, but all the demands from MDAs, the regulatory agencies, at the level of the local government, the state government, and the federal government. A lot of pressure on the investors are demanding for one form of payment or the other. So I expect that this should be reviewed. We should work more on bringing those who are not in the tax net into the tax net, so that we have a broader tax base, rather than putting too much pressure on those who are already in the tax net.
Okay. Just from what you've said, yes, the projected aggregate revenue is 9.01 trillion. And from your observation, the non-oil sector needs to play a bigger role. The private sector is key into it. And now you've mentioned the issue of broadening the tax net. What other avenue do you think should be included in ramping up this revenue projection?
Well, in many other claims, although this relates a lot more to the personal income tax, just about 10 or 15% of the population or the taxpayers accounts for about 85% of the revenue. And what that is telling us is that we have a tax system that is progressive, that effectively captures all the people that have the capacity to pay. We have quite a number of billionaires in this economy. How much tax are many of them pay? So we should have a framework to effectively capture those who have the higher capacity to pay, so that we get them to pay a lot more. That is one. Secondly, this economy is also largely informal. This economy is almost 50% informal. And there are some elements in the informal sector that are also doing very well. Some of them are very wealthy. They are building mansions and all of that. So we should also have a framework to ensure that the segment of the informal sector that are also very wealthy, I'm not talking of the poor market women and all of that. We don't need to bother all those. But the segment of the informal sector that are also very wealthy needs to be brought into the tax net. And the minister also talked about efficiency in tax administration. Efficiency can also make a whole lot of difference. And I'm aware that at least between the ministry and FRS, some steps have been taken to ensure that the system is much more efficient. The system is more IT driven, to minimize leakages. And the minister also talked about independent revenue. At least in 2021, the figures that was reported was very impressive, coming from the independent revenue. This is revenue from the MDAs. Those of them that generate revenue, internally generated revenue. And he said for the first time, the revenue crossed the 1 trillion mark. So I think we can also look more in that direction, because there are quite a number of agencies of government that also have the potential to generate a lot more revenue without really putting additional pressure on investors in the economy.
Okay, Doctor, The GDP projection for 2022 is 4.2%. Haven't suggested ways of ramping up revenue. How can the country achieve these GDP targets and possibly exceed it?
Well, the way to achieve it is to create the environment for those who are investing to be able to invest very well. Because the business of wealth creation is in the private sector. It's with the investors. When we celebrate high non-oil revenue, these things are coming from the private sector. So if the environment is much better, we are likely to see an improved performance in the private sector. And we'll be able to grow the economy more. That is one, and some of the things we need to do is to look at the policy environment. First, we need to look at the monetary policy environment, look at the foreign exchange policy environment, look at the tax environment, look at the trade policy environment, we look at the situation with the ports, we look at the energy situation in the country, we look at the issues of security, we look at the issues of connectivity and logistics, transportation and all of that. So there are both structural issues and policy issues that we need to put in place so that these growth targets will be achieved. And a lot of the actors that will drive the growth targets are those who are in the private sector. So it's a question of the kind of environment we create for the private sector to be able to contribute a lot more and grow the economy so that we can achieve the growth target that has been set in the budget.
Okay, Dr. Muda, before I let you go, talking about the fuel subsidy, there is a provision for January to June against the World Bank's suggestions. What do you make of this?
Well, the subsidy question is a fairly complicated matter because it is not just an economic issue or a commercial issue. It's a social issue and it's also a political issue.
Okay.
So all of these interests will need to be balanced for us to be able to come to a point of agreement. But what is more important is for us to make sure that we expedite action to ensure that we improve our domestic refining of petroleum products latest by July. If that happens, either through Dangote refinery or the NNPC refinery or both, I think that will make it easier to transit to a fully deregulated regime in the downstream oil sector.
Dr. Muda, which is to say looking inwards is the best way to go.
Certainly.
Thank you so very much for sharing your thoughts with us at this particular point in time.
Thank you very much.
Well, moving on, despite efforts by the present administration to reawaken the spirit of entrepreneurship among Nigerians, in the year 2021, it is the view of some citizens that low financial conditions proved a challenge, while some expressed joy that government efforts have been able to stabilize the economy in Nigeria and hopes for reversal in high costs of commodities in the new year. Joy Ubani was in some markets and brings us this report.
Economic watchers say 2021 has been a challenging year for many businesses, with effects of COVID-19 and the new Omicron variant posing even greater challenge. Business concerns note that the multifaceted negative and positive impact, notwithstanding of the global health challenge, helped in fostering a remodeling of business models to serve consumers.
Because the effect of the COVID-19 of 2020 or 2019-2020 spilled over to 2021. So we could not have enough products in the market as usual, because the Chinese, the Korea, South Korea, and the rest of those countries were seriously affected by the COVID-19 pandemic. So that reduced the quantity and the quality of goods that came into Nigeria.
But what are the expectations of entrepreneurs in 2022?
I would wish the value of Naira to dollar be stepped up. Let at least $1 be equivalent to about 300 naira. That will make the prices of goods to come down a little. And then at the long run, Nigeria should now think of producing their own products.
As Nigerians continue to launch into entrepreneurship and other businesses for growth and stability in the country, the year 2022 will be more fruitful and rewarding. Joy Ubani for Business Express.
Well, just reaching us now is the news that President Muhammadu Buhari has appointed the board of the management of Nigerian Petroleum Company Limited in accordance with the powers vested in him under Section 59, subsection 2 of the Constitution and the Petroleum Industry Act 2021. The chairman of the board is Senator Margaret Chuba Okadibo, representing Southeast, Mele Kolo Kyari, the chief executive officer, and Umar Ajia, chief financial officer. Other board members are Dr. Tajuddin Umar, representing Northeast, Mrs. Lami Ahmed, representing North Central, Malam Mohammed Lawal, representing Northwest, Engineer Henry Obi, Southeast, Barrister Constance Harry Marshall, South-South, and Chief Pius Akinye Lure, representing the Southwest. Details will come in our subsequent bulletins. At this point, we see what's happening in the commodities market as early Fed rate hike bets hold back gold as virus wars weigh. Let's see the global commodities market. Well, the capital market has closed and the positive run has continued as the all share index appreciated by the 1.05%, closing at 43,476.75 basis points. Volumes of shares were 1.248 billion, valued at 42.966 billion naira in 4,032 deals, while market capitalization is 23.426 trillion naira. Next is a global market.
Hello and welcome to the global market update. Now we begin global market review from Europe, where stocks traded slightly higher on Wednesday as global markets keep an eye on US bond yields. The DAX in Germany traded in positive territory, advancing 0.5% to 16,232.16, followed by CAC 40 of France, which rose 0.35%, while London's FTSE added 0.17%. On the flip side, stocks in Asia were largely lower as technology stocks in the region came under pressure amid rising US bond yields. Hong Kong's Hang Seng Index closed 1.64% lower at 22,907.25. The Shanghai Composite also dropped 1.02%, while in Japan the Nikkei 225 topped 0.1%. In the US, stock indices were slightly lower in early trading after the Dow Jones Industrial Average notched a record close the previous day as investors flocked to stocks that stand to benefit from an economic recovery. Futures on the blue chip Dow added 31 points, S&P 500 dropped 0.03%, and Nasdaq 100 0.29%. Back home, African African market struggled for momentum in early trading, with most stocks in positive territory except South Africa and Ghana. And that's Global Market Review. I'm Neka Uko. It's over to you, Benny.
Thank you, Neka. And on that global note, we end today's episode of Business Express. Business Express returns tomorrow at 9:30 a.m.
We want to talk about rights, there are obligations. I'm not saying that this government is a saint, it's very far from it. But there are things that we can do to make it better, and that's the challenge I'm throwing to you. You don't want to build this nation? I don't know where else you want to go. If I had a choice, I'll come back. When I stand outside and I hear what you have to say about this country that I know that I can die for as one, then I'm really sad because you're young. You have education. You have tools. You have a huge future ahead of you. And you're condemning yourself before you started on that journey. So please don't do that. Please don't.